Hey, it's Friday. It's time for another weekly news recap here on Bald Prairie Real Estate. My name's Matthew Pfeiffer, real estate agent in Regina, and that's my trusted assistant. We're going to talk about 5 awesome news topics here this week. Of course, inflation's going to be in there, but as the title suggests, we need to build a whole heck of a lot more houses in Canada, according to this most recent Desjardins report. Exactly how many that is, though, we'll get into that in just a minute. Let's start off with another terrible bad dad joke. How do computers get drunk? They take screenshots. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the news. Let's talk about inflation because the January numbers just came in from Stats Canada. Of course, the Bank of Canada uses that number, the inflation rate, to decide whether or not they're going to continue to raise interest rates, keep them the same, or drop them. Of course, that's one of many metrics. I'm going to talk about that in the next article here. But the market expectation was that inflation would be 6.2%, and it came in at 5.9%. So quite a bit better than actually the market was expecting, and a continuation of that trend. We're seeing those year-over-year numbers continue to decline. Another interesting note is that from September to today here in February, of course, just using the last month's numbers, which were January, the inflation rate has been about 0.7%, meaning that if that number were to hold for the rest of the year and you annualize it out, inflation would be 2.3% in 2023, right within the Bank of Canada's 2 to 3% inflation target. That, of course, is partially why the Bank of Canada has been saying that as of right now, they're planning to pause rate hikes. That, of course, can change. We've seen that before, but this is all good news. We're starting to see inflation get under control. The one alarming number, or the one that's probably the most frustrating for people right now, is that the price of groceries continues to increase. So hopefully eventually we see that starting to trend down. Speaking of the Bank of Canada and inflation and interest rates, what is inflation? How is it calculated? And how does the Bank of Canada look at that and other metrics to determine what they're going to do with interest rates? Now, so I'm going to put this article link below because there's a bunch of really good explainers in there. But the Bank of Canada looks at not only inflation, but a lot of other metrics like labor force, employment data, and a whole bunch of other things to determine whether or not they're going to raise interest rates. Inflation is one of those big numbers they look at. And what it is the CPI, Consumer Price Index. That is a basket of goods that the Bank of Canada tracks price fluctuation year over year. These are the things that everyday Canadians would spend money on. Fuel, groceries, the cost of housing, and a whole bunch of other items. They weight them and they use that to track how much prices have gone up or down. The Bank of Canada wants to see inflation at about 2 to 3%. So when we talk about last month that inflation was 5.9%, that is year over year, meaning that that basket of goods got 5.9% more expensive than it was the previous year. Now in that CPI, there's a whole bunch of different ways that it's calculated. You might have heard things like the core inflation. That is when you take out items that are very volatile, that change prices quite a bit month to month, like fuel and grocery prices. But there's also things like the CPI trim and the medium. Again, read through this article. There's a great explainer on that. And then they talk about all the different labor metrics and bond yields and stuff like that that the Bank of Canada is using to determine what they're going to do with interest rates. It's not just inflation that they're looking at. Quick time out here. If you love learning about the real estate market or the process of buying and selling a house in Canada, why don't you hit that subscribe button, because that's what I love doing on this channel, educating you about the market and teaching you about the process. Give this video a like too while you're at it. Maybe leave a comment. Let's get back to the news. Next up, I finally have an update on Canada's anti-flipping legislation. I said in an earlier video, I talked about that when there finally was something to tell you. Well, now I've got some more details on that. So right now, if somebody buys a property, whether they fix it or they don't fix it all, but they sell it out, if it does not become their primary residence, then they do not have any sort of tax exemption and have to pay taxes on any profits that they have in that property. As part of the election, the government said they want to make sure that flippers paid their fair share of taxes, ignoring the fact that that basically already happens anyways. So what this legislation does is remove the primary residence exemption, because in theory, if somebody were to buy a property and then sell it within 12 months, any profits that they had were tax-free because it was their primary residence. Now the government is removing that loophole, but then leaving a bunch of exemptions that make a lot of sense actually. But anybody now who buys a property and sells it within 12 months, 100% of the profits are taxable as business income. The exemptions are, and they make sense, if somebody gets divorced or if their family is expanding, so you have more kids, you have to sell the house, you have a death in the family, there's a whole bunch of other ones, and they all make sense. So essentially here, this is a policy that's going to sound really good when the government talks about it. It looks great on Twitter. But really, the number of people that were buying a property, moving into it, and then flipping it out within 12 months is a significantly small portion of the market. But this is what the government campaigned on, and they've put it in the legislation now. Next up, we're talking about the price of new construction, and it has fallen again here. So this is CMHC's report out here talking about the price of new construction homes nationally. It dropped 0.2% from month to month. But the cities that saw the largest drop were, and I'll put them in order here, Winnipeg at 1.3%, Victoria at 1.1%, and the Kitchener-Cambridge-Waterloo area saw prices decline 0.9%. Again, month over month. The reasons why these prices decreased, well, deteriorating market conditions and the lower cost of materials for new construction. Now, don't make a mistake here. New construction is still very expensive, but things like the price of labor and other materials has declined from the peaks we saw 6, 12, 18 months ago. Sticking with new construction, this is a report out from Desjardins looking at how many homes need to be built in Canada. And they say 50% more homes need to be built to keep up with our current immigration policy. So typically in a busy year in Canada, you see about 200 to 250,000 homes are built. So Desjardins says we need to see 100,000 more homes built per year on top of what we are already seeing. Now, in the last election, the government promised that they wanted to see 100,000 new homes built over the next decade, obviously substantially below what Desjardins says we need to see built in just one single year. And that gets to what I've been talking about a lot on this channel, and that is we simply don't have enough homes in Canada and we don't build them fast enough. We already had a shortage of homes in Canada before the ramp up in immigration, and this is due to a whole host of factors. Zoning bylaws, the red tape, the taxes the government's put in place, making it more difficult and take longer to get homes built in Canada. And now we have a mismatch between our immigration policy, which the government wants to see higher immigration to patch some of the holes we have in the labor force and make our economy stronger, but it doesn't match up with how many houses that we can build in Canada. Take this year, for example, we're likely going to see 1 million people. This is new people coming to Canada, and we're probably going to see about 200 to 250,000 homes built. So think about it, the average household in Canada has about 2.5 people in it. So that would mean that we would need to house 1 million people, 500,000 new homes in Canada, and we're likely going to see 200 to 250,000. You see the disconnect there? And if you think that real estate prices in Canada won't start increasing because of the shortage of homes, well, that I think tells you right there what's going to happen long term to housing prices in Canada if we do not get on top of this and start seeing more homes built and fast. If you think more homes should be built in Canada, give this video a like, hit the subscribe button, heck, even leave a comment below for me, and watch this video next here on the Bald Prairie Real Estate YouTube channel. As always, guys, thanks very much for watching.